Hi, and welcome to the A Plus U podcast, where we chat with our internal experts and community members about how finances affect us in the real world, translating complex subjects into lively discussions. Brought to you by Affinity Plus Federal Credit Union. I'm your host, Danielle Johnson.
And I'm your co-host, Amber Shanley.
Well, if this podcast were all on video, you would see that we're missing a plant. Why is that, Amber?
Well, there was one there, and now it's not.
Because it's no longer with us.
This is why we buy fake plants, Danielle.
We had a communication issue when it came to watering our plant.
So I didn't know it was real.
So now if you can just envision us sitting on a couch with a coffee table, there are 2 cups and no plant. So
it was a pretty orchid. Thus, I thought it was fake.
Yeah, well, fake plants. I agree.
See, they last longer.
Well, I'm super excited because on today's episode, we're talking about homeownership. We're talking about the good, the bad, and hopefully we answer any questions that anybody that is listening have, because homeownership can be really intimidating.
Well, and not only homeownership, but like, what about when you already own a home?
And when your basement floods.
Or, a hailstorm comes.
Like, a lot of things can happen.
But also, what about like the memories made in a new home? And in either your current home or a new home, whatever it may be, I think that's really what inspires me, is hearing those stories from our members. And once they are into their home, whether it's from us or doing home repairs or improvements, through us as well. So lots of different ways to do many of those things.
Well, homeownership can be complicated, and let's try and simplify it a little bit, I think.
Absolutely. And I think that's why we have our guest here today.
Today, we're joined by Tara Rutz. Tara, you are the Mortgage Servicing and Origination Manager. I'm going to be honest, I don't know what that means. So why don't you tell me and everyone listening what you do here at Affinity Plus?
Yes. Well, thank you for having me here today. I'm excited to chat with both of you on this podcast. But so basically, Servicing and Origination Manager, I do a little bit of both, helping the mortgage loan officers with originating loans. So we help members as they're buying homes, doing their home improvement projects, doing the things to the home that they want to do. But then I also lead the servicing team. So once you own a home and you have your first mortgage with Affinity Plus, we have a team that handles like when you have a homeowner's insurance claim or
property taxes,
paying that.
So it doesn't all just stop once you buy the home. There's a whole team that helps you, like supports you through owning your home.
Yeah, absolutely. Like your property taxes have to be paid. So if you have an escrow account, we're going to pay the taxes for you. When you do have a homeowner's insurance claim, typically a lender is listed on your homeowner's insurance, and then we have to monitor the claim, make sure that the home comes back to its original state, that sort of thing. Just making sure that, you get the home back to where it was prior to something happening.
Yeah, and any repairs. Like, you don't want to live in a damaged home.
Right, absolutely.
Yeah.
Yep.
Wow, interesting. Okay. Well, Tara, I think that's a good transition. So you mentioned the word escrow, and I think there's a lot of jargon that gets thrown around with homeownership. So maybe walk us through some of the jargon that we might hear when you're a first-time home buyer and you've never done this before, and what does some of that stuff mean?
Yeah, absolutely. So, right away off the bat, down payment. I think that's a big one. Everybody thinks you have to have 20% down when you buy a home. You don't have to have 20% down if you're a first-time home buyer. You can have as little as 3% down. There can be programs out there that allow you to put less down, but it will depend on the program. For example, like VA, that would be another one that you could potentially put as little as no money down. But I think that's one of the bigger ones, is that down payment. Appraisal, I think that's another one that can be confused with like a home inspection.
Oh, sure.
So an appraisal is usually done and ordered by the lender once you find a home. So you sign a purchase agreement with a home you want to buy, you're excited, but you obviously want to make sure that the home is in the condition you're expecting. And so a home inspection is usually done to make sure that it is what you're expecting. An appraisal, on the other hand, is ordered by the lender to make sure the value's there and that it meets the lender's guidelines. So they're 2 different pieces of information.
Can you go into a little bit of like what does an appraisal look at? Like, how do they know the value?
Yeah, so an appraisal is an opinion of value. And so they're going to look at like your square footage in the house, how many bedrooms, how many bathrooms, what size property, when was it built. And then they're going to find homes of similar style and compare it. So
Like in your neighborhood.
in your neighborhood, yeah,
Sure.
they
Okay.
have to be within a certain distance, as also within a certain time frame.
Okay.
Oh, okay.
So and then they're
So there's a lot of factors
Mm-hmm.
that
Yeah.
go into an appraisal.
Yeah, absolutely. Yep.
Okay.
What is an escrow? What is escrow? How's that?
I'm in escrow. It's like there's like a show,
Yes.
and he's like, I'm in escrow.
So depending on your lender, escrow season can be different. Here at Affinity Plus, we do ours in June. So it's first payments when they adjust are typically in August. Basically, when you buy a house, you have the option to what's called escrow your taxes and insurance in your monthly payment. So you have two choices. You escrow and you basically take your taxes and insurance, divide it out over the entire year into your monthly payment, and then we pay your taxes and insurance for you. The other option,
That seems like way less stressful.
yes, it's the most common way to go. Is most people do escrow.
But I'm sorry, you said there was a second option?
So the second option is you just don't escrow. So then your monthly payment is just your principal, interest, and mortgage insurance if you have it, and then you pay your taxes and insurance on your own. So
Okay, so that's something you can either choose to have your lender kind of take care of that for you,
Mhm.
or you can choose to schedule those payments out and make them on your own.
right,
Okay,
Yep.
What do you do, Danielle?
I escrow.
I don't.
Wow.
I know.
Look at that.
I know. I like to label different accounts with what I use the funds for. So in my style, I just have an account labeled property taxes and another account labeled insurance. And then I save for it every month. Like I pay myself.
So like you're paying your mortgage.
Like I'm paying my mortgage, but I pay myself. So I kind of, I am the escrow account of my household.
Well, I'm super impressed that you can remember because so I have a friend who actually paid off her home, and she every season she's like, I forgot to pay my property taxes again. And I'm like, I'm just thinking to myself, like, if I were not in escrow, would I remember to do that? She goes, I need the paper statements because apparently I don't pay attention to the emails.
I love paper statements, especially for property taxes. They make my heart happy. It's the insurance one that's always electronic. And I'm like, did I pay that? Did I do it? I don't remember.
Well, so are there any other kind of like words or phrases or just anything that you can think of?
You said mortgage insurance. What's mortgage insurance?
Yeah, mortgage insurance is so when you put less than 20% down on the home, or I should say, it allows you to put less than 20% down on your home. So when you have less than 20% down, then mortgage insurance is added to your monthly payment. And it's a monthly premium, can be minimal in many cases. So it's going to depend on your credit, how much you're putting down, that sort of thing. But it helps a lot of people be able to get into a home without having to wait to save that entire 20%.
We did that for our first home. We put,
Absolutely.
I think we put 3% down and we had mortgage insurance.
Yep.
But yeah, it definitely, we wouldn't have been able to purchase our first home if it weren't for that.
Yeah.
So
Yep.
it is incredibly helpful.
Yep.
Big benefit to some individuals that would like to purchase a home that maybe don't have those funds saved up for 20% down, or like you said, want to maybe not put 20% down and elect to maybe use those funds for another purpose.
Right. Yeah. And with the cost of homeownership nowadays, I mean, saving 20% can be a substantial amount of money. So it puts people into homes a lot sooner than having to save that entire 20%. And then the nice thing is, depending on your lender, once you hit 20% equity, you can potentially have that mortgage insurance removed without having to refinance. So
Equity from when you purchased the
from
home.
when you purchased it. Yep.
Okay.
Okay. Wow. Tara, as we're kind of talking through some of these jargon words, if I am an individual listening and I maybe rent or I live at home, like what kind of advice would you say to someone that might be thinking about starting that journey to homeownership, or how would they know if they're ready?
Yeah. So basically, to kind of get started, one thing I would always start off with is just kind of finding out, like, where do you want to buy a home if you're thinking about buying it, so that you can get an idea of like the cost of a home. What are you looking at? Because every area is a little bit different.
Sure.
So I think starting there, do you have family or friends? Do you have a job you need to be near? Do you have schools you want to be in? Like, what is kind of driving where you want to land on that first home purchase? But then I always think about that down payment, not just like the down payment itself, but how much is it going to cost you to live there, right? So if your payment is $1,000 a month and you're expecting a mortgage to be just say $2,000 or $2,500 a month, like pay yourself that difference so you can kind of see what it feels like to pay that mortgage.
That's really good advice.
Yeah, that's great.
But then can you still continue to do the things you want to do? Because we all have different lifestyles, right? Like some of us want to go to the movies every Friday night.
Or Starbucks every morning.
Exactly. Yep. You want to be able to continue to do the things that you want to do, even though you own a home.
Right.
And then I think it's also still important to be able to save even after that mortgage payment, because like we're talking about with homeowners insurance claims or anything like that, there are things that can happen that are outside of natural disasters that can just happen to the home. And you have to fix those now. So are you prepared?
Or maybe you just want your house to be a different color.
Exactly. Yep. Or you want to add a bedroom.
Yes.
Who knew paint was so expensive?
Yes, that is a true statement. And if you bought the bright pink house on the street, maybe you don't want it to be bright pink anymore.
Maybe not. Yes.
And that can be expensive to maybe have someone else paint it if you're not feeling comfortable doing it, depending on the size, things like that.
Yeah.
Absolutely.
Yep. I think no matter what, we all just want to make our home our own, which just takes additional money. And so you want to be prepared for that too.
Absolutely. Individualized.
Mm-hmm.
Well, I think that's a really good point for someone who, because I know when we were looking at our first house, like we had a newborn but like you said, schools, neighborhoods, jobs. I mean, there's a lot of different things to think about when you're picking out a neighborhood that you want to live in. And sometimes, well, don't get me wrong, there's neighborhoods I want to live in, but my budget does not allow that. So those are really good. That's a really kind of good list to like think about as you're going through that process.
Mm-hmm. So Tara, like Danielle was saying, like there's neighborhoods we want to live in, or maybe we're looking at. What are the next steps? Like, where do I go from there? Of like, okay, I made the decision, I want to buy a house. What's next?
Yeah. So once you've kind of found like, okay, this is how much I want to spend on a house, that's a really good time to kind of start that pre-approval process. You're going to want that pre-approval in your hand before you start shopping for homes. It just makes it a little easier to be able to put in an offer once you do find a home instead of waiting for that pre-approval when you're ready. You can start with just talking with like a mortgage loan officer, having a good conversation about like what you want to spend. Where do you think your credit is at? Where do you want your monthly payment to be? And do you kind of see that is all in line? But then once you're ready, then doing an application and, going through the process, having credit checked, having your income reviewed and stuff like that to make sure that what you're expecting to pay is still something that can be approved and ready for you to buy your house.
So a mortgage loan officer would help make that seem more viable or help guide where like a budget could end up being.
Yeah. Yep. So a mortgage loan officer is a really great resource just to talk about like, what can you expect that payment to be? There's also great online tools with calculators and stuff like that. So that is always something you could look at prior to talking to a mortgage loan officer, just to get an idea of what a monthly payment would look like. But a mortgage loan officer do great in just like looking at the overall picture. And I think the really good thing about that too is just like the real conversation of if it isn't within budget, like where do we need to be, and kind of talking through that a little bit and the why. Or more importantly, if you can't get pre-approved at that time, how can we get you there?
Sure. So I come in and I'm thinking through like, I think I'm ready for this. But once we kind of take a step back and look at every, kind of all the things that you mentioned, maybe like you said, I'm not quite there. So the next conversation would be, how do I get myself prepared? Is that what you're saying? Yeah.
So sometimes maybe it's that we need to get a stronger credit score. So maybe something needs to be paid off, maybe we need to pay off credit cards. Maybe we just need more credit history, so there can be things that we can just talk through to help get you prepared for when that time comes.
I love that. I think that's really where like the benefit of sitting down with an Affinity Plus mortgage loan officer is all of those things Tara just said, but also really ensuring that it's almost like a full credit review, wouldn't you say, Tara? Like that initial pre-approval of here's what's out there, here's where we want to see it, you go.
Right. Yeah, I think there's really good value in just having a general conversation about where you do want to go and where you are, even if you're not quite there yet.
So I remember when we were buying our home, we got pre-approved and we were looking at a bunch of houses, but then it was like, okay, now what? So kind of walk everyone through, once you've been pre-approved and now you're actually looking at homes, like kind of where you go from there.
Yeah. So like once you're pre-approved, then you're more or less like working with a realtor directly. So some will choose to find their own realtor to help them shop for homes. Some might just go to the realtor that's like selling a house per se. So that can vary just based on your preference. But really it's just shopping for homes. Looking in the communities, looking at the different things you want in your home. Do you want 3 bedrooms? Do you want 4 bedrooms? All that kind of stuff. And then once you find a home, then you work with a realtor to do a purchase agreement and work through like the sales price. When do you want to close? How much do you want to put down? Do you need anything to be done to the home before you close? That sort of stuff. And then I always say like, then it kind of turns over to the lender from there once you found the house. And like, now you just get to do the fun part of like getting ready to move.
So it's really a team effort is what you're saying. Like there's a lot of moving parts and a lot of people involved, but everyone's working together.
Mm-hmm. Yeah, there's a lot that happens behind the scenes. Once you find the house, you have a title company that will help conduct the closing, do title search. You have the lender that's working through all of the financing part of it. You have the realtor that will just help if you choose to get a home inspection or navigate getting the appraisal scheduled. And then you as the buyer having to do some things as well as like finding homeowner's insurance, providing documents and such. Generally, it takes about 30 days from your purchase agreement to a closing at a minimum. Some people will choose to go longer, but
and that's just because of all like the kind of work you just said, all the behind the scenes stuff that kind of has to happen and process in order for you to actually like have the keys.
Yep, exactly.
Okay, gotcha. So 30 days is the typical time frame.
Generally a minimum, yeah.
Okay.
Mm-hmm.
Okay. And you mentioned closing. So I mean, just like I said, kind of reliving my own home buying experience. I remember they were like, okay, it was our first home. And they're like, well, you need to bring a check for closing for like $7,000. And I was like, excuse me? No, what? So not everyone else is as shocked as I was once upon a time. Can you kind of walk through what like a closing would look like?
Yeah. So the title company is where you would go to for the closing. And so at the closing, basically everything that you have agreed upon up until that time is brought into one document, what's called the closing disclosure. And it'll summarize like all your charges and all your credits. So you will have like your purchase price on there. But then you also said like maybe you wanted to put $10,000 down. So that'll be on there. Maybe you did like $1,000 earnest money. So that'll be credited on there. And then between the two, you end up with like a final cash amount that you have to bring to closing.
And the earnest money is between you and the realtor. Like
Right.
the realtor guides you through that
Yep.
side, not your lender.
Yeah, that's typically something that's done when you put the offer in on the home. Yep. And then you sign all the papers.
Like 100.
Yep.
But like that's newer to Affinity Plus. We have some documents that you can sign electronically now.
Yeah, there's a lot more documents that can be done electronically. And just also, I think the huge benefit there is the transparency. So, when you're talking about like you were surprised like to hear 7,000, like now with the transparency of people getting their documents several days ahead of time, like you have time to kind of like read through and review and then go into that closing like a lot more prepared and like ready to sign and then enjoy buying a home.
So you have an opportunity to ask questions before too and like really understand what you're signing instead of just like coming in with a pen and being like, yeah, I'm buying a home.
Yeah.
Oh, and encourage though. Like that you would definitely want a buyer to ask their mortgage loan officer questions before the closing.
Yeah, absolutely. Yeah, that's the best time to do it. Like your mortgage loan officer is a phone call away. So if you have questions on those documents, I would definitely encourage calling them and like walk me through these. So then by the time you get to closing, you're ready to sign.
So we kind of just like walked through the whole process and kind of taking a holistic look at everything. If, what is kind of maybe the one like question or the one thing that you would want to answer or tell someone who's like thinking about buying a home? Like if they were to walk away from one thing from everything you just said, like what is that? What is that?
That's a good one. I think the biggest thing would be like, it can be overwhelming, but just try to definitely lean on your resources because it is also very fun. You know, when you guys were talking earlier about like a home, and it can be intimidating, and it can be. But then you're also talking about the memories. And I think that's the one thing that I think of when it comes to homeownership. You know, when I think of my home, I think of like what my kids will remember, right?
Mm-hmm.
Like they'll wake up Christmas morning and they remember our home. They'll remember the yard that we played games in. They'll remember, you know, just all of that stuff. I think that's just lifelong memories.
Oh, I love that.
I do too. It makes me think about the memories, like my nephews and niece come over often, and I have goodness, what is it called? Coasters on the table that are now permanently marked with crayon from my niece. So that's my memory. She will not remember because she is far too young, but that's okay.
Yeah.
I get that. And I get that just like gives me the fuzzies. Like it gives me the feelings when you said that. Like, because like I just think about my girls and them. They have like their own rooms and they've painted them like 3 times. And like we do all kinds of shenanigans that like I hope they remember.
Right. The journey of it. Yep. Is a memory in itself.
Well, and I think even like painting houses or like rooms like that, to make those memories, sometimes you want to do something bigger. Like maybe it's redoing the bathroom because you bought that house. It was built in 1970 and that bathroom sure reminds you of 1970. And like you want to bring it to 2025, right? What are ways that people can look at doing that, like in a way to use their home maybe as collateral or like tapping into the equity?
Yeah.
Like
how do you afford
yeah.
redoing your bathroom when you don't have, $15,000 in your savings account.
Right. Yeah. I mean, I think it's a lot like, we're talking about saving 20% down, and sometimes that can be hard. It's kind of the same thing when you're doing those big home improvements. You're talking about like building a shed or, some of those bigger ticket items. When you have the equity in your home, then you can do a couple different options. Home equity loan or a HELOC, home equity line of credit. So fixed home equity loan is just going to be kind of like a car loan. Like you take out a large sum of money up front, you get all the funds, and then you pay it back over a term up to typically 15 years, depending on the lender. But it's a fixed payment. So just like when you buy a car, right? Like you walk in, you get a sum of money, you expect a monthly payment for the next so long, and you pay it back. Home equity line of credit is a little different. So some people might use a home equity line of credit if they expect to do like a lot of small projects. Like I want to do a bathroom remodel and then I want to pay it off, but then I want to do a kitchen remodel and then I want to pay it off. And then I want to do, and the benefit to the home equity line of credit is you can use it and pay it back, use it, pay it back, use it, pay it back. So
it's just open.
It's an open line of credit, but it's using the equity in your home as collateral. So you're going to get a lower interest rate compared to like an unsecured line of credit.
So it's kind of like a credit card without the card.
Right, exactly.
Oh.
Because it's like attached to an account and you draw off of it and then you pay it back. There's minimums based off the amount owed.
Yep.
Like a credit card.
Yep. Here at Affinity, you just like transfer it from your checking into or from the line of credit into your checking, and then you can just use it as you see fit. And then the payment is always based on what you borrow.
Oh, okay. Awesome. So I could do my bathroom in the beginning of the year and do my floors at the end of the year.
You've given her ideas.
I know. I'm like, is my husband listening to this podcast right now? Because we have projects to do.
The wheels are spinning.
So now just to recap, a small recap, we've done, home buying and what does that look like? And then how do you use the equity in your home to do like a home improvement project or keep up on your home? So now kind of looking at those two things together, like what else is there? What haven't we covered? What do we need to know?
Yeah, I think another good thing that I would, for those that are preparing to buy a home or thinking about it, would just be like looking online for like seminars, classes. There's a lot of online tools out there, calculators we talked about before, just like to see what payments would look like. So there's a lot of free education. I would definitely take advantage of some of those opportunities just to know what is homeownership entails.
And any questions that maybe you weren't able to find an online resource on, you can ask your mortgage loan officer.
Yep, absolutely. Yep.
Find an expert. Big fan.
Big fan. Literally. Is there an adult in the room?
Tara, please help us.
So now, I guess, I mean, like, I own a home. Amber, you own a home. But like you mentioned earlier, there's a whole like servicing piece. Like there's a whole team to kind of support you now that you own a home. And you mentioned, like homeowners claims, things like that. So can you just kind of like walk us through what that looks like or what that team kind of can help us with now that we're in our home?
Yeah. So basically on the servicing side is really when you own a home. A couple things that are taken care of through there is like paying your property taxes, managing your escrow account. So for those members that choose to escrow, we're making sure homeowners insurance premiums get paid, that, the lender is listed so that if something happens. One thing I would share is that many think that you can't switch homeowners insurance because you escrow. I would check with your lender, but generally that's not the case. You still are able to choose who you want to go through for homeowners insurance. You just have to work with your lender so that it's listed properly and they get the proper documentation, but definitely something you could still do.
That's a really good point because, budgets change. You may find a better option for bundling if you had different car insurance.
Yep.
And that's just a nice tip to have because I've switched insurance companies a couple times, and not only is it a lot to manage all at once, but not escrowing I thought was a little easier for me until I had to pay all the premiums up front and wait for a refund. And that was not fun.
Yeah.
But if you escrow, you don't necessarily have to do that depending on your lender.
Right, exactly. Yep. Typically the lender can pay that upfront premium and then you would just refund your escrow account back once you get the refund from your other insurance company.
So, just thinking through, we live in Minnesota. We all weather.
We're here to help in those situations because it is an overwhelming process. Like, there's a lot, not only is there a lot of money, but, we're talking about making your home your own. And now it's just been like ruined by a storm. There's a lot of emotions involved in like, where do you go next? Who do you have to talk to? Who do you trust? So there's a lot of moving parts, just like when you buy a home, there's a lot of stuff happening.
Well, that's why we have a servicing department here, and that's why most lenders do.
Yeah.
If they're offering the escrow side of things, they do partner with you, which is such a huge benefit. And I think that's really where finding the lender that you feel that care and trust from, I think is most important for each individual person out there.
Yep. The other thing that I would say in regards to servicing or your homeowner's insurance is to like pay attention to when you get it from your insurance company and review it at that time versus waiting for when you get your escrow.
That's a really good point because your insurance could renew in August.
Yeah.
But escrow was done in June.
Right. So then you have a whole year, like a year of catching up. So every lender is different on when they do it. But if you are in that situation, you're kind of behind on month one. And so then when you get escrow of next year, you're having to kind of play catch up. So pay attention to your homeowner's insurance when it comes and talk with your lender to see how you can adjust when your insurance adjusts or even switch insurance if that's what you choose to do. But just figuring out like how can you be proactive for when the next escrow season comes around.
Or call your insurance agent when you get that bill, because I was lucky enough to where mine called me because my premium was going to go up over $2,000 this year just because of things in the world impacting it outside of weather.
Yep.
And through that conversation, we're able to find different discounts for me in particular. And I think that was where I was like, oh, definitely want to stay with you because you gave me a call and a heads up, because that would have been a real surprise. And I probably would have looked elsewhere and maybe received the same types of discounts.
Yep, exactly.
Well, Tara, we really want to thank you for coming on the podcast today.
Yeah, thank you for having me.
Yeah, it's been enlightening. And I hope everyone feels a little bit more comfortable with the home buying process, or at least coming in and starting that conversation if you feel like that's, you might not be ready today, but let's figure out how we can get you there. Because it is a lot, but the end result is so worth it.
Oh my goodness. The reward at the end.
Yeah, definitely worth it.
Mm-hmm.
It's like the pot of gold at the end of a rainbow.
Yes.
It really is. It really is. So we just really appreciate your time and your expertise on the podcast.
Yes, thank you again for having me.
Well, thank you for joining us today on the A+U podcast. Be sure to follow us wherever you listen to podcasts. And to continue to learn more about banking and to stay up to date with Affinity Plus, check us out at affinityplus.org.
We look forward to having you join us for the next episode of A+U.
Affinity Plus is an equal housing lender and federally insured by the NCUA.